Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADMISI Services International Limited. And here is our daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A counter-to-the-counter bearish dark cloud cover pattern yesterday. This time the market was capped by the neckline, currently at 94.70 of the old October to November head and shoulders top pattern, with the declining medium moving average, currently 96.29, just above that. Meanwhile, we had support on a closing basis from the flatlining short medium moving average, currently at 92.66, with some more support from the broken upper bear channel line, currently at 92.16, as well as the lesser Fibonacci line at 92.07. Now, I had previously spoken a lot about the twin bear channel idea I had for this market. We had a late July to date bear channel, currently at 74.93 to 92.16, which had until 3 weeks ago been running this market. The move up broke this smaller of the two bear channels, though I'm wondering if the market is now repairing this upper bear channel line. We also have, still live, a second upper bear channel line, something I've often repeated. Now, both bear channels have the same lower bear channel line, which is currently 74.93, originating from early August, but the second larger bear channel utilizes the March to date downtrend, currently at 102.90. The issue that clogs this idea is that just before this higher trend line, we have a congestion band between 101.55 to 103.35, which has lurking within it the flatlining long moving average, currently 103.31. There is one other pattern, an important one that I've been talking about at the end of last week, and that is last week was a weekly key reversal up. This is an interesting pattern that seems to have come somewhat out of the blue, but it is there as a genuine pattern. The issue is whether the market really wanted to make such a pattern in the first place, especially given recent actions. I have a suspicion that it did not. So far today, a move down below the short medium moving average, the broken upper bear channel line, and the lesser Fibonacci line at 92.07. We now have some free air below until at least the mid-October lows at 89.32 and 88.77. Now, as long as we can overcome the periphery of the support around the lesser Fibonacci line, which I think extends down to about the 90.80 area, be interested to see how this goes now. Spot gold. A bearish harami yesterday, and a very interesting one, as it looks like the overhead congestion, which I'd originally called the overhead formidable congestion band between 1779 to 1788, may have broken the back of the recent rise. It is not certain yet, but it looks like the rising wave may have crested and is perhaps sliding back down. The base of action, I should actually say the halt in a decline rather than base of action, was once again the congestion at 1771. It seems the bullish incentive from the weekly key reversal up last week may have finally run its course. However, in the bigger picture, we are still set up with just over half of November gone for this month to be a monthly key reversal. Thus, if we close on the 30th of November either over 1660 or under 1633, then we'd be on. Right now, we are still very much looking like a monthly key reversal up. Looking below, the next supports are at 1754 and the September 2021 low at 1721, plus the flatlining medium moving average currently at 1712. Meanwhile, above the congestion band between 1779 to 1788, we have the neckline of the December to date head and shoulders top action currently at 1799. And finally, the long moving average just a little higher, currently at 1802. The overall action here since September, as I've previously highlighted, is reminiscent of a triple bottom, with a double bottom within it formed over October and early November. We've already achieved the primary and secondary targets for the double bottom, and last Thursday the market's actions triggered potential targets for the triple bottom. Thus, we have a primary target X2 above in the 1815 area, for secondary harder to achieve target X3 in the 1862 area. These now might be at risk. So far today, a follow-on lower from yesterday's bearish harami down through the support at 1771 and contemplating the 1754 level right now. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADMISI Services International Limited. And here comes the final bit.